Hey everybody, today is Friday. It's the 26th of April, 2013, and this is Brian Shannon from alphatrends.net. Hope everybody had a good week. Let's take a look at the markets here. We'll look at these numbers first. Let me just bring those over from the side. For the S&P 500, we saw a rally, a gain that is, of 1.78%. Nasdaq up 2%. Semis up 4%, making new highs as well. So it was a good week for equities. It was volatile. Of course, we had that so-called flash crash on Tuesday here, where we had that rumor on Twitter, or hacked Twitter account rather. But the market recovered very nicely, and you can see here on the S&P 500, the volume weighted average price for the week was right here at about 157.60. So a good positive week for equities. Last Friday, we saw that the market came down and closed just below that rising 50-day moving average, and actually that was Thursday that it closed below it. But we were right there. We were looking for the possibility that maybe this market would encounter some resistance at about 157, but I caution that, as always, when we have the primary trend is higher, which we do with a rising 50-day moving average, that the benefit of the doubt goes to the buyers until we break an important, significant level of support, which in this case is this 153 to 153.5. So we bounce very strongly from that level once again, and that will add significance to it going forward. But I don't think it's likely to be something that will be tested next week. If it is tested next week, well, it obviously means that we're going to have a pretty nasty week. But we have a primary uptrend, and it's what we'd like to see now is that this 157-ish area kind of goes back to holding the support. If we take a look at a 30-minute time frame, you can see that it's kind of been a little bit of area of contention here recently, and we're back above it. And once again, it's the direction of the 50-day moving average that matters more than whether we close 1 or 2 days below it. As I'd mentioned last week, there was a guy on TV, one of the host of a show who's always on the New York Stock Exchange floor, saying that the market had switched to a downtrend, and that is absolutely just foolish to say. We still have a clear uptrend in these markets, and people who are shorting it and looking for the top are going to get what they deserve until the market actually breaks down and shows a pattern of lower highs and lower lows below declining moving averages. We give the benefit of the doubt, but obviously when we have these bouts of selling, we have to get defensive. We have to listen to the message of the market, and the market speaks clearly to us by stopping us out of stocks, and then we have to reassess and say, what are the strong stocks to be in? Where do I raise my stops to after the ones that survive the pullbacks? And it's just listening objectively to the message of the market and tuning out all the news that we have to look at and say we're getting through earnings season right now, and the average stock is doing better than it was a week ago with these averages all higher. The Nasdaq had a great rally as well, and we were talking about the from the failed move comes the fast move. We had this breakdown, and we've actually had 3 of these where we've kind of broken support and then quick rallies up in the Nasdaq. Now you've got to ask yourself, where do we stand in that overall cycle? Do we want to be a buyer up here of the index? You can look at the weekly time frame and say it looks like maybe it's going to run beyond last year's high, which is definitely a possibility. We still have this trend line to keep our eye on as well, but the path of least resistance is higher overall. But do you want to buy after a rally such as the one we've just seen? I said last week, who's the dummy that sells down here? Who's the dummy who sells short a break of that support? That you want to ask yourself, where has it come from, and what is the nature of that market as well? The nature of the market is that we have these breakdowns that trap in the shorts. And why is that? It's because we still have a primary trend which is rising with that advancing 50-day moving average. We've been above it, that 50-day moving average has been advancing all year, and there's no reason to think that this market is going to turn lower and break down completely. We have to get cautious when we see this type of selling, but as I always say, the primary trend remains higher. The benefit of the doubt goes to the buyers. That is, if the buyers remain in control with a rising 50-day moving average, it's more likely that the market is going to take these pullbacks and either consolidate through time or continue back up with the primary trend. And that's what we're seeing here is possibly, on the Russell 2000, it's possible that we're seeing a larger level of distribution up in here. We kind of got up to this prior support area of 93 that was important, and we made another lower high. So we have this market really consolidating and showing a lot of volatility recently. The question is this volatility simply that the market is digesting these gains, or is it distribution before an inevitable decline? We can't call it a bear market in my mind until we break down below about 88.5. And what we wouldn't want to see is, for instance, next week if we dropped from this point to 88.25, it doesn't mean you should sell short, because you have to ask yourself the two important questions that we always ask. Where has the market come from? Where does it have the potential to go? So when we had this drop, we said, where has it come from? It's expended a lot of energy. Where does it have the potential to go before it's likely to meet support? It found the support there. I don't suggest buying that support. I suggest buying after we see the pattern of higher highs and higher lows reemerge. So next week, I think what we want to see in the Russell 2000 is, first level is probably this about 92.50. We'd like to see that rising 50-day moving average hold as support. And if that fails, then probably 91.75 is going to be the next level of importance before we test some of the bigger levels. And let's do that for the S&P 500. Again, 157-ish is going to be our more important level that we want to see hold. And in the Nasdaq, the Nasdaq's just been so damn erratic all year, but 69 to 69.25 would be nice to see, but it's really not trading well technically. One thing we can say though is it's riskier to buy up here after an extended move has been made. Let's look at the semiconductors. These guys were a star for this week, and as you can see here, for the year, the semiconductors are now up 12.1%. That's just behind the performance of the financials. But if you look at the chart here, we had an important week. That is, we broke back above last year's high right here at about that 36.25 level, and it now puts our sights on the highs from 2011. And let's just take a look at that together. I think these highs were 36.99. This week we saw a high of 36.84. So above 36.99, then we're into multiple year highs in the semiconductors, and that possibly sets us up for a test of maybe 39.5 or so. And these semiconductors have just been super resilient. They've had a great rally recently, so be aware the best scenario for these would be a pullback even down to about $35.60. If we look at this, if we look at the last couple weeks, you can see this inverted head and shoulders pattern. We kind of broke this neckline here, and if we could pull back not to $35.60 to that neckline, or maybe I think $35.60 would be good to see. Otherwise, holding 36 would be another level that this market could continue to move higher from, and make an assault on those highs from last year and push through them. This week, of course, we came 15 cents lower. I'm sorry, we came within 15 cents of that level. Financials made another new high, and this group, again, when we have a rising 50-day moving average, we give the benefit of the doubt to the buyers. That's something you've heard me say for years. I've said it a lot the last couple weeks because people have been kind of freaking out as we close below a 50-day moving average for the first time in the financials a week and a half ago. But look at what happened. It's the direction of the 50-day moving average. The first time we close below it, a lot of times it'll close there for a couple days, suck in the shorts, and then they get squeezed real hard. And now we've got another pretty good sized rally here recently. We got to new highs for the year, so that of course brings us to new highs for the last several years. What we've had our eye on for quite a while is this $20 area that seems like the market is gravitated towards that $20 level. Levels not seen since 2008. It seems like it's heading towards that, and again, you have to ask yourself, well, what are the key levels in here that we want to see hold as support? And I think about $18.40, really, $18.40 to $18.50, somewhere in this area. Let's take a look at a 130-minute. You can see this has been a little bit choppy as well, but I think that would be our first level we would want to see hold. But we continue to give the benefit of the doubt to the buyers. Let's take a look at Apple. Apple had earnings this week, and there was quite a bit of volatility. I think it got up to about 425 in the after hours when they reported. But the key level in here for the near term, just to turn this market a little bit more neutral, is really this prior band of support at 420 to 425. If we can get back above that and hold above that, then perhaps Apple begins the healing process. It's still in a primary downtrend. If they don't scare you out, they'll typically wear you out. There are good opportunities for shorter term traders always in Apple. It's got a lot of volatility, sometimes too much volatility, as we saw on the earnings day, unless you were involved in it at the right time. But Apple will always provide opportunities for shorter term traders. For investors, we're still in a primary downtrend, and we've got to look at it as guilty till proven innocent. It's going to take time to heal. Let's look at gold, because gold, I get a lot of questions about gold, and it's bouncing, and it should bounce after a big drop like that. I don't trade gold. I don't even consider it as a trade candidate, because it trades 24 hours and you've got a gap every single day, and it really takes a lot of the opportunity to for the intraday range is out of it due to the gap. You can see we gap higher, small range, gap lower, small range. On Thursday and Friday we had bigger ranges, but the point is there's so many better liquid vehicles to trade. If you're a longer term investor, you're playing a different game. If you're one of these gold bugs who thinks the that it's going to for whatever gold buds think. I don't even want to get into that. But the fact is, we're in a primary downtrend. We're getting a bounce within that downtrend, and I think that people will eventually get hurt and regret their purchases in here. We'll see what happens. Silver, same thing. I would say you avoid it. It's in a primary downtrend. And let's take a look finally at Tesla. Tesla's been a good stock here on the upside. I've been talking about it for a couple weeks as it broke. What we were talking about actually was the volume weighted average price since this event right here, and I had written about it since that gap, that is, and I wrote about it on Alpha Trends right in here, saying, can it go to 100? Let's see if it can hold above 42. And it's been making these higher highs and higher lows, and it just continues to move higher with a big short position in it. I don't really think it goes to 100. You never know what can happen. The key though is to manage risk in the trade, and by that I mean you have to look at it and say, what's comfortable for you? Which one of these higher lows do you want to put your stop under? It's up to you to decide where to do it. If depending on what your comfort level with the risk is, how big you think the possibilities of a pullback are, and again, managing risk and locking in your profits. So again, I hope everyone had a good week. Take a look at alphatrends.net. Go sign up for a 7-day trial if you want, and we talk about stock ideas every day in videos and in chat room. Thanks again.